Hello, everybody. How are you doing? Good morning. Welcome to episode 4 of the Bitcoin trade series. Okay. Yep. All right. So let us proceed. I hope you're fine. Hope you're doing good. All right. So yes, the last trade idea we looked at on episode 3 was actually this. This was the last trade we looked at on episode 3. Yeah, so I wanted discussing a few things and then showing you guys a few screenshots uh about this trade. Okay, so yes, I remember this trade well. I marked out this trade on think before, but I got activated with this candle. So on the 28th, that this candle, this one here, 7 p.m. on the 28th of October. Yes, that was when I got activated on this trade. And as you all can see, this first push down that happened on the 27th of October, that was the day before 9 a.m. That was when this trade got activated. And it was actually a sniper entry at 58,000. So I kind of knew, that Bitcoin was going to reject at 58K because obviously that's an 80 level, it's a quarter point, so, institutions like to, most times enter around those areas. You understand? So as you can see, 58, but it was actually a sniper entry. There was a zero drawdown on that trade. So I can remember clearly that I wasn't activated on this trade. All right, so let me show you guys a few screenshots. I wasn't activated on this trade. Like price came so close, but then I wasn't activated on this trade. All right, so this is the screenshot. I still have it. As you can see, so for income claims, I had to like close the lot size. As you can see, so the sell I already made my profit on the sell down, and now I was anticipating for Bitcoin to reject from this area. As you can see, I have my buy limit waiting, and price was so close to activating. As you can see, the entry was actually at 58K. You understand, but then the broker pricing is different, so it's a little bit down, and then my stop loss just at 56,800. So I wasn't activated on the trade. I wasn't too happy about it, and as you can see, a couple of hours later, Bitcoin actually now went ahead to its target. It actually hit my target 3,600p, but I wasn't in on that trade. But something very amazing happened. Something amazing happened. So I noticed, So it didn't fill me in. Price consolidated for a while, and then you can see our price, went up, right? So we had something like this. So this was the entry, which, I couldn't get in. And then we had a little bit of consolidation, and then price spiked up, and then gave 1 to 3. But then I think we had news on that day. We had the dollar news, and I had not deleted my limit yet. So probably I was busy, I forgot to delete the limit, because obviously, I'm sorry, the way I do it is once I miss a trade, and then, price has actually gone to hit my target of, 3 times what I am risking. And as in, when price was about to activate and then fill me in, and then it rejected and went straight for TP, I usually just delete the trade. It is not valid to me anymore because it has already gone to hit my target without me. You understand? But then Bitcoin, I was very lucky to, like, I've not like deleted the limit. So I think I was busy that day, and then I forgot to delete the limit. I left it. And also, when the news was about to drop, you understand, as before the news was about to drop, I saw we had, this liquidity that was there. So we had, liquidity at entry. You understand? Like, I didn't know it was actually this big spike down. You all can see this big spike down, right? This was actually the spike that activated this buy trade idea for me. And here is the proof, guys. Here's the proof. Let me show you. So, all right, so let's look at it again. Then, as you can see, now I actually got it. So the big spike down activated the trade for me. So I was in on that trade. And as you can see, this is, so entering, and this FSL was still there. And then I got in on that trade. Just, I was lucky to be on this trade because I wanted playing the 58, but then it was too much of a sniper. And then I actually missed out on this at first. And then, price luckily came back down. Smart money had to come for this liquidity resting here. And then, they came for this liquidity that was here, captured it, and then, rejected. And then price went all the way to TP. And as you can see, my TP was open. So I knew where 1 to 3 was, got to 1 to 3 close push outs, and then just allow it to ride. And as you can see, it was a very, very good trade for me. Actually, went all the way to like 1 to 9. So I took it all the way to all-time, highs at 68,800, right? I think it got to 69,000. That is the highest Bitcoin has gotten to date. All right, 69K. I think that was where it got to. Right, yes, so Bitcoin hit 69K, and that was the highest. And then we had a break of structure, and then market started selling, down. But then the trade idea was an amazing trade for me. It was actually, it was good. So we've discussed this. We have already discussed this yesterday. I just wanted showing you how I was able to get in on this trade. Again. All right, so that is that. So if we bring this. So that was the 24th trade, right? It was actually a win plus 3%, and then the total reward was 9%. Okay, so now we are going to continue with the 25th trade now. Okay, so back to Telegram. This was the trade, and it gave me a 1 to 9 weeks reward. Grateful for that. All right, so the next one I can say is on the 1 hour. So I got activated, as you can see, the liquidity sweep, and then Bitcoin, gave me 1 to 3, and then was going all the way to all-time highs at 67,000. So I had a buy limit here. I had another buy limit all the way from down, this one here, and now I wanted catching the third buy from here again. You understand? So as you can see, my entry was at 61,000. Stop loss just below this at 60,150. You understand? This is it here. As we can see, it didn't play out. So this one happened to hit stop loss. Then it's okay to take a loss, right? Yeah, this actually, it was playing out, it was going in my favor. I was like, okay, let's go. And then at the end, it hit stop loss. So why was I looking to take this trade? Oh, sorry. Let me pull up the chart. Yes, so this is it, right on October 30th, 2021, okay, 12:17 p.m. my time, so I was looking to buy. So I believe I was actually looking to buy because, okay, as you guys can see, we had this liquidity up here, and then we had this liquidity up here. So I was aiming for this liquidity, and then apart from that, price was coming in a bullish form for me already. As we can see, we had this higher high, we had this higher low, we had this, after we had this break of structure here, lower low, lower high, lower low, and then we had a break, right? And now we had higher high, higher low. We had this higher high, this higher low, and then this higher high. So I was looking to take a buy from this institutional candle, right? 50% stop loss just below the low. Yeah, as you can see, actually go activated, went a little bit in profit, and then it just came down for my stop loss, which is okay. So I couldn't join that buy, but then as you can see, I took it again. Yes. So this hit stop loss, it is okay to take a loss. So accepted it. I was okay with that. So let's go. The 25th trade is actually a loss. Okay, so our 25th trade, we're gonna be down 1%. Okay, 1%. And then for the total reward, we are also down 1%. Okay. All right, so we're also down 1%. Yes, that is for the 25th trade. Okay. Yeah, so that is that has gone. And then as you can see, I wrote it stop loss. So this didn't play out for me. Yes, and then the next one was actually this, as you can see. So let me pull up the chart, copy the link, and then I'm gonna drop it here. All right, boom, we have it. So that hit stop loss, no problem. Okay, I was on my chart again. November the 1st, I was, I think the next day, right? So November the 1st, come in, let me quickly yes, so 2 days after, yes, 2 days after, I actually saw the break of structure again. As you can see, price was coming in a bearish form, lower low, lower high, lower low, and now I had a break of structure. So the break of structure created what equal highs as a good sign for me, that is liquidity. And then the liquidity I wanted, catching why I had a buy limit here, which failed, and then the liquidity up here. And then I saw the break of structure. That was my first confirmation, right? My first confirmation for every trade idea is what? Is there a break of structure present? Okay, so now the market seems to be bullish. Market has given me a higher high. I'm anticipating, to catch buy from higher low. And apart from that, I can see that this is a structural level, right? As you can see, demand supply zone. This area has been holding for quite a while. As you can see, price got here rejected. Okay, we had institutional candle play here, and then we had mitigation at that same zone. And then this area has been holding, this area has been holding, right? So just projected it all the way to the future. And then my entry was at what? A 50 level, right? 60 to 50. That is as a 50 level, stop below the low. First target at 123, overall target at 67,000. And then let's see, played out perfectly. Okay, so what I was just explaining was this. As you can see, just take a look at this zone. The zone has been holding for quite a while, right? Okay, we had this rejection, we had this rejection. We had this institutional candle play that captured the liquidity. I played a mitigation here, and then this area has been holding, holding, holding. Can you see? This is more like a strong demand level. So I just projected it into the future. And I wasn't taking this trade based on demand and supply. Obviously, it was based on, the concept of, smart money, but then it happened to just be at an area of demand and supply. And then I had a break of structure. This is my confirmation to take the buy. This is my top range, my down range, higher high, caught price at higher low. and then to take price all the way to a new higher high. That is how I trade. And as we can see, this played out very well. Okay, so entry was at a 50 level, at a 62.50, and boom, go activated straight to profit. Right, so go activated. So as we can see, this did not fill me in. So now I don't know if I was actually still in on this trade. Okay, because I can see now that the liquidity, this liquidity has been captured, and then this liquidity I was also anticipating has been captured. So can you see? Smart money with this eye, they took out this liquidity, and then they took out this liquidity. So we're only left with the one up here. And then we had this as the higher high, higher low, right? And then we had this higher high. So looking at these two equal lows here, yeah, I think I was still in on this trade. So, you know, smart money to capture this liquidity resting below here, just like what happened in this area, and then fill me in, and then we got in here, and then price valued all the way to the upside. Okay, so I was still very bullish on Bitcoin, and as you can see, played out perfectly. All right, 60 to 50, that was a 50 level. How many pips stop loss? So it was a 900 pip stop loss, which is $9 for a 0.01 lot. As you can see, it gave me a 1 to 9 risk to reward. That is very, very amazing. Okay, so 1 to 9 risk to reward. So the 26th trade. Okay, so was a win. So we're up back plus 3%. And then the total reward on this was 9% again. All right, that is plus 9%. That is good. So amazing trade idea that has played out. Let us proceed. All right, so the next one, so 1 to 9 played out perfectly. And then the next one was this. Yeah, I remember this. Copy link. So we were so close to all-time highs. Okay, we were close to all-time highs already. And then I saw another opportunity to get in. Okay, I think we had already passed all-time highs. Yeah, I think so. Yeah. All right, so we took a buy, played out perfectly. And now as you can see, we had consecutive bullish candle. Okay, and then one bearish candle going against what the trend. The trend is obviously buy. So someone obviously was, taking Bitcoin to the upside. And then we had just one bearish candle in the opposite direction. To me, this is an institutional candle. All right, so I'm expecting price to come inside that area, and then many times this level used to hold, and then price should mitigate out of this area and then continue going higher. So I was expecting price to come back down and then go back up. So I was aiming now for 70K. So even before it got there, I was already aiming for 70K. So after we pass 70, and then we can aim for 80 and then 90. But then okay, what happened? Okay, so that is for that. And then I'm gonna copy this link and then paste. Yeah. All right, as you can see, go activated, clean trade, and then price just went straight forward, got to 69K. So that was that. Let's come here now. This is it here. So let me use this. Play two somewhere here, and then let's go to the 4 hours time frame. So as you can see, I marked the trade on November 9th, 10 in the morning. So November 9th, 10 in the morning, this. Yes, so anticipating for price to reject from this candle. So I just play 50% of this candle, right? 50% of this candle was the entry, stop loss just, at this low, because I am playing the institutional candle. So entry was at 66,000. That is a quarter point. That is a 0 level. And then my stop loss was at 65,500. That was a 500 pip stop loss, $5 for a 0.0 one lot size, right? Yes. Yes, so, and then took it all the way to 69K. So all the way to 69K, that was a 1 to 6 weeks to reward for me. All right, so it played out. And then I think I was trying to catch a lower time frame entry somewhere here. Yeah, but this actually played that. You can see got to 69K and then price rejected. So obviously this already played out. I got more than 1 to 3 on this. So this is November 8th. Let me see if I can get the screenshot, if I can get it for you. November 8th. All right, so that is November 8th, 4 p.m. Coming, guys, just give me 1 second. Coming. I'm trying to look for you. October. All right. So November 8th. Oh, I don't have the screenshot. Maybe I didn't take the screenshot for this. Okay, I'm coming. I think I see it. Okay, no, I didn't take the screenshot for this one. So I don't have any screenshot to show you for this one. But actually anticipated it, and as you can see, played out perfectly. You can see we had, and again, look at this. We had this equal lows in this area, so kind of knew that this, Bitcoin was going to come down into that area. So we have an institutional kind of just, and then we had liquidity that was created at that area. That's a very good sign. This is smart money came, for this liquidity that is down here, and then captured it, activated us, and then went straight for a 106 risk to reward. So this actually played out now. So the 27th trade, we're up plus 3% again. And then total reward was 106. So plus 106%. Yes, that's the 27th trade. All right, so that played out perfectly. And now the next trade, we have a trade just before price was about to go for 69K. So I saw this. Okay, let me copy the link out. And then yeah, paste and go. All right, let's be patient. All right, so we have it. So November the 10th, 7:57 p.m. my time, right? So I was looking to take a buy at 66,500, right? So 66,500, let's go 1 hour time frame. All right, so this is it. And then, all right, so yeah, we had equal low start liquidity. I was just showing you on the 4 hour. And then in terms of the market structure, we were bullish, right? We had this higher high, we had this higher low. And as you can see, price closed above. So this was an higher high. So I had my, confirmations to take this trade because the market was still bullish to me, right? Higher high, higher low. We had a liquidity sweep somewhere inside this candle on the lower time frame. You will see the candle that actually swept this liquidity, and then price created a new higher high, right? So 69K, but I didn't know that price was like Bitcoin had already gotten to 69K, and then I think the rejection was about to start. So it caught me. Yeah, and then boom, straight for SL. Right? So immediately they got to 69K, smart money just decided to start taking it down. And I think this was the highest Bitcoin got to before it started dropping. You understand? But then I wanted like taking a buy because did I know it was going to reject from there? No. So he got a 69K. I thought maybe they were going to, do the same thing, come create a higher low and then keep expanding to the upside. There was no way I would have known that, smart money was going to start rejecting, like they were going to start dropping Bitcoin all the way down. There was no way. So I was going to take a loss and then now see that, okay, I think now they're about to start dropping price on Bitcoin, but there was no way I would have predicted this. So it got to 69. I thought it was actually going to come here and then take me, go all the way to like 75, 80K. That was what I was anticipating. And then it got to 69. Everything was still intact. I had a market structure. Market structure was in place. Higher high and higher low, higher high, higher low, and then possible higher high. Right. But then it didn't play out. Then we had a break of structure, hit my stop loss, and I was like, okay, I think now it's about to reject, right? Now it's about to reject. Yeah, so the 28th trade was a loss. I lost that one. Okay, but that's good. It's good, okay? At least we've made more. So we're down 1%. Okay, 1%. And then for the total reward, there was no reward on that. I was also minus 1%. Okay, so minus 1%. So just for this episode, we've lost the first trade. We won the second and the third. So we're up 6%, down one, down two. So we're still up 4% just this episode. Okay, so let's see how it goes. All right, let's see how it goes. Okay, so that hit stop loss. Boom, hit stop loss. As you guys can see, down. And now the next trade was this. So let me copy this. Okay, that was the next trade. Pasting, go. Okay, so now on the 4 minutes. Wow, I'm not sure we are going to have okay, let's see. So this was actually on the 4 minutes time frame, November 14th, 10 in the morning. Okay, so let's see if I can have the 4 minutes time frame. If TradingView can allow me go back that far. All right, so let's see, 4 minutes, do we have it? Oh, I can go back that far in time. As you can see, you can go back this far in time. So there's no way I can go back that far. All right. So let's just use what we have on the screen. Okay. So as you guys can see, the timestamp and date stamp is there, November 14, 2021. All right. So we had this push up, we had this, higher high, higher low, higher high. And then I saw this, we had this area that seems to be holding this level of supply. And then we had this liquidity sweep and then price, rallied all the way to the downside. I mean, this trade is still bullish, right? So, and I was trying to take a sell in a bullish market because this was the last higher high we had here. We had this higher low. So this is what I'm saying. Let me annotate. This was higher high, higher low, higher high. So and then I was expecting a sell. It was supposed to keep going up because after a higher low, it should give a higher high. But from what I can see, yeah, I said price left. So it means trade actually sold down. Means my analysis was right, but I was trying to go against structure here. Okay, so from what we can see here, price left. So can you see? Price came all the way up and then dumped to the downside. So it didn't fill me in. So and then it captured the liquidity I was actually anticipating. As you guys can see here, captured it. So price left. So the 29th trade, price left us. So price left. Cool. All right, so price left. That would have actually been a good trade, but then it left. All right, so what's the next one? Let's wait for it to hold up. Oh, 1 to 16. Sheesh, what kind of trade is this? Oh, yes, I remember this trade. I remember this trade. I think I have the screenshot for this trade. Yes, on my MT4 before I played out. Yes. All right, so we paste it here. Paste and go. Boom. I remember this trade very well. I actually marked it. I saw it on my, okay, yes, I marked it out on my phone because I remember I was on my phone. I saw this equal lows and then the market structure was coming to the downside. I was like, okay, I have a trade idea immediately. Entry at what, 6,500 as a 50 level. Okay, and then we have stop loss at 61,200. And then first target of a reward of 3 to 1 at 58,400. I mean, since it got to 69K and started rejecting, let me just join the sell. Okay, so we had, I can see this, I can see something here. Okay, I can see something here. Did we skip any? This is at 64,950. It was a trade idea here. Okay, how come I don't have it yet? Oh, I don't have it there. But then I can see this did not play out. Okay, I don't have, maybe this, I took this on my phone. I just marked it out on my phone on my MT4 probably because I don't have the screenshot for before. But then, I was checking all of that and I added this to it. So it didn't play out. I'm trying to see why was I looking to sell here. Okay, from what I can see, I think the market was bearish, right? We had this low, this high, this low was bullish, higher high, higher low, higher high, higher low, higher high, break of structure. So yes, I think that was why I was trying to sell. Was it this, or was it, is it this one? No, it's not this one. This is on, this is November 17th. This was November 14th. So that was 3 days before. Yes, okay, so I'm sure I was actually looking to take this trade because of the break of structure. So market was bearish, okay, and I was looking to sell. But then all of this liquidity that was up here, this liquidity, dynamic liquidity, external liquidity. So that was why they came for this liquidity and they came into this imbalance. Okay, came into this imbalance and then price rejected from there. So this didn't play out. So I don't have the before. So I'm sure I marked this out on my phone. But since it's there, I added it. That means it was a trade idea that I marked out. So this R did not play out. So let's add it to our lists. So the 30-year trade. Okay, we lost that one. So we're down 1%. And then for the total reward, we're also down 1%. Okay. So now we've lost 3, we've won 2 trades. So 2 trades gave us 6% increase. We lost 3 trades, we're down 3%. So we removed that from 6, we are still up 3%. So this one we're down 1%. Okay, that's for the 30-year trade. Okay, that didn't play out good. I saw it because I want to be as transparent as possible. All right, so Now, the next one is down here. Yeah, this is it. So this one here. Okay. All right. So as you can see, so I had a sell and then a buy. Okay. So and one was going to play out eventually. So the sell, this is it here. All right. So on November 17th, 2021, 8 in the morning. So obviously from what we can see here, the market was bearish, right? Lower low, lower high, lower low, lower high, lower low, equal lows. So just, simple institutional candle captured liquidity. I was anticipating for mitigation to happen and then, stop loss just above the high and then my TP one at 58,400. That is what we, yeah. Okay, it's on a 1 hour time frame, right? Okay. So we had this, lower low, lower high. I remember what happened in this trade. And then we had lower low, we had lower high, and then we had low low. Equal lows, we had liquidity, right? But what can you observe? We have lower low, lower high, and then a new lower low. Now, before mitigation happened, before price activated me, it already captured the liquidity. And I remember I was now contemplating, should I delete the limit? Should I delete the sell limit or I should leave it since the liquidity has been captured and our market seems to have broken structure to the upside. So now I was in on this sell. Now it was a low probability trade for me because one, the liquidity has been captured. Two, price actually broke structure to the upside. But I wanted, like, I had a buy limit now at this candle, and like there was a candle that captured the liquidity on a lower time frame. If you scale down to the lower time frame, you will see the candle. That is where my entry was for this buy. Okay, so let me pull up the buy. So this gave a 1 to 16, works to the what? All right, this is the screenshot, as you can see. Well, I would not pull it up here because the lot size is not covered. Okay, but this is it. This is the screenshot. You can see this is the stop loss. This is the entry and then stop loss there. And then this is for the buy. Okay, so let me pull up that for the buy also. Buy it SL, but the sell was in profits. Yes, paste and go. All right, perfect. So this is for the buy. The liquidity has been captured. So I had to remove the sell so that I can have the screenshot for the buy separate. All right, we had a break of structure and then look at what happened. So I was in on the sell. I had the sell limit. I had the buy limit. Now, I was anticipating, now the sell was low probability for me already because this liquidity has been captured. So now I had the sell limit, hoping that price should establish the higher high here because already price has broken structure. So it was bullish. So this is higher high. So I wanted price to activate me, which it did, and then come down. Okay, maybe I can just make something little out of it because if it comes to this higher low, now, I'm expecting something like this, activate the buy, and then obviously market structure should win, right? And then go up to give me a higher high. So all I wanted was price to activate me and then come down, okay, come down and then come and fill me, activate this buy at 50% and then go back, again, go back up. That was what I was anticipating. So I was more, positive on the buy than the sell. But can you see what happened? The buy didn't hold and then the sell held. So the sell happened to hold and then the buy didn't hold. So I had a buy limit and the sell limit. So after a couple of hours, the buy hit stop loss and then the sell continued in profits. So as you can see, this, the buy hit stop loss and then smart money still took price to the downside, as you can see. So the buy limit was a loss. The sell limit was a 1 to 16, reached the reward. Amazing, amazing. You can see came down. Yes, this big spike down, big, even more than 1 to 16, more than 1 to 16. I had to just leave it at 16 because it actually still dropped and dropped and dropped and dropped. So as you can see, so if we should go by the low, that was like a 1 to, this was the lowest it got to. That was like a 1 to 39 reached the reward on the straight, 1 to 39 on that. So the buy was a loss, the sell was in profit. And then looking at it big scale, like looking at it, I still knew it was going to drop, but I was only, convinced, like I was convinced about, when I saw the break of structure, I was like, maybe you want to keep going up. But then I was still open to sell opportunities. And I was like, okay, let me see which one was going to play. I was okay to take a loss on one because I know if this sell hits stop loss, the buy should be in profit if he activates me. You understand? So I was open to see what was going to happen. And, the sell actually held, gave it 1 to 39, reached the reward, and then the buy did not play out. And then the buy did not play out. And then the buy did not play out. Okay. All right. So for the sell, we had a 1 to 39 reached the reward. So let's go back. The 31st trade. We had a plus 3%. And then the total reward was a 39 reward to 1. That's amazing. It's a 39 reward to 1. Sheesh, that's big. All right. So that was a 39 reward to 1. And then the buy did not play out. So the buy was a loss, took a loss on that. Okay, took a loss on the buy. So the 32nd trade. Was a loss, took a loss on that one. So we're down 1% again. And then our total reward, we're also down 1%. Okay, so how many trade have we covered so far? 8. All right, let's make it 10 for this session. Okay, so that is that. And then this is the next one here. Okay, so for the buy, this each stop loss. All right, cool, no problem. Okay, so I had the limits also for, okay, this is for the sell. Yes, I hit stop loss. Okay, is that for the buy? Okay, that was for the sell. And then this was the limit for the buy also. So as you can see, I had a sell here and then the buy was still there. So the 2, and then 1 played out eventually. All right, so the next trade happened to hit stop loss also. Let's see it. All right, so this was on the 21st of November, 10:31 p.m. Oh, I remember this trade. I was so positive on this trade and then it didn't play out. I remember this trade. First, we had equal highs. I was like, okay, now let's see the liquidity. And then we had internal liquidity. We had external liquidity. The structure of the market was bullish. And I was like, I was so positive on this trade I was going to hold. You understand? That is, this just taught me that, you can never be too sure on a trade. Yes, everything you might see all your checklist might align, all your 5 checklists, 6 checklists, everything was present on this trade, but I still didn't play out. You understand? Still didn't play out. Okay, let's look at it. This was on the 21st of November, 1 hard time frame. So I believe this is it here. Okay. Yeah, so you can see we had equal highs. Yeah. On this trade, there was liquidity, which is what I always look out for. And then the market was coming in a bullish form, right? The market was coming in a bullish form. Although I, kind of now seeing it clearly now, I can see where the mistake came from. Because if this was the last, lower low, lower high, and then we had this lower low, this one push down, lower low, lower high, and then lower low, right? But then I was considering the structure within the main structure because the overall structure was coming to the downside, right? But then the structures within the structures were giving me bullish vibes, right? We're getting bullishness within the main bearish structure. So I was trying to take a buy with the structure within. and and obviously it didn't play out. As you can see, we had what? Higher high, higher low, higher high. We had internal liquidity, beautiful. We had what? Our imbalance that was created. All right, and then we had this institutional candle, captured this liquidity, captured all of this liquidity. Like, all right, this trade is going to play out. And then we have liquidity also at the top. I was like, all right, this trade is going to play out. Okay, and then this stop loss, I think my entry was also at 80 level, stop loss at 57, 300 as a 700 pip stop loss, $7, right? And then I was aiming for 1, 2, 3. Yes, and it did not play out. Boom, just hit stop loss. And then we had a big spike up. And then price continued to go to the downside. So this did not play out. And then I think I tried catching another buy here. Let's see if this played out. So, oh, did this play out? Oh, he did. He did. All right. Um, so this trade did not play out. This one hits my stop loss. This is what's okay, the 33rd. Okay. Trade. Okay, this hits stop loss also. So we're down 1%. Okay, down 1%. And then for the overall reward, we are also down 1%. All right, we're also down 1%. Okay, so this did not play out. Hit stop loss. That is okay. It's okay to take a loss. Okay, must have known that by now. Right? So this hit stop loss. All right, cool. And then the next trade actually played out well. Okay, I can say the next trade is based on an harmonic pattern from what I can see here. So copy the link and then let me paste it and go. All right, so we had an harmonic pattern that formed in the market. From what I can see, this is a shark harmonic pattern, shark or cipher harmonic pattern. Yeah, there's a shark harmonic pattern. Sorry. Yeah, because cipher is at 786, shark is at 886 to 1.13. Yes. So yeah. So I was open to, you know, looking for evidence of, breaker structure in this area then for price to go up, right? So this is on 1 hour time frame, still on November 22nd. So it was this. So November 1 hour time frame. November 22nd. All right. I think is it 1 hour time frame? November 22nd, 1 hour time frame. So November 22nd. All right. Okay. This is it. Yeah. This is the harmonic pattern. Yeah. This one. So we had this, and this. Yes, that was it. But then the entry was on a 1 hour time frame. The center was on a 1 hour time frame at 56. All right, let me scale down to see something. All right, let's check 15 minutes quickly. Oh no, 30 minutes. 15 minutes. Maybe the 10 minutes. 5 minutes. Okay, because I was trying to see why, I had although I was anticipating that price should reject from there. But now I'm trying to see why my entry was at 56,000 with the stop loss just at that 55,300. I can see the stop losses at that week. Yes, we had equal lows that was captured by smart money and then price rallied up. Yeah. Okay, this is what I'm saying. Let's go back to the 1 hour time frame. Go back to the 1 hour time frame quickly, as you can see. So this is going to be the last trade. So we had equal lows. First, we had the harmonic pattern that was calling for a buy. And then we had equal lows that smart money captured. So smart money captured is equal lows and then price rallied all the way to the upside. So I'm trying, like, why was my entry at 50, at 58? Okay, at 56,000, sorry. So I was anticipating a rejection. Yes, it happened. Price captured the liquidity, from what we can see here. Let me pull up the chart quickly. All right, so we had the liquidity sweep, obviously, and where I was anticipating for price to reject from, price actually did. But then the entry is what I'm trying to, let me check 50 minutes, 45, 40, 30, 35, 15, 16. Yeah, I think I see it now. Okay, so yes, we had the evidence because I know that there was going to be a break of structure on lower time frame, right? So what was the structure of the market? Okay, the market was coming in a bearish form. So we had a lower low, we had lower high, and we had lower low, right? Let's check it clearly. It clearly created the lower low because it closed below. Let's go to the line chart. You can see it clearly, right? This was the last. So you can see, so we had a new lower low in price. So this was a lower low, lower high, lower low. So yes, I was waiting. We had a break of structure already. And then, so we had our break of structure to the upside here. Okay, so market broke the structure, established the higher high. You can see this very last candle. Okay, so somewhere inside this candle was the institutional candle that captured the liquidity, which I was looking to play with my stop loss just at the down range. And then I was aiming for 1 to 3, capture this, external liquidity sitting at this place here. As we can see, played out perfectly, gave a 1 to 6 risk to reward. 1 to 6. All right, so this gave a 1 to 4 risk to reward. Or did they give us more? I'm not sure. I think it started to drop from there. Yes, so it was a 1 to 4 risk to reward. It didn't get to 1 to 5. I'm not sure. Yes, no, it didn't get to 1 to 5. So that was a 1 to 4 risk to reward ratio on this trade. So this obviously went way more than 1 to 3. So this gave 1 to 4. I think I marked it out. So risk to reward of 1 to 4. So let's go back to this, and then the 34th trade was actually a win. So we are up plus 3%. Okay. And then for the total reward, I gave a 1 to 4 risk to reward. Almost 1 to 5, but we always do all numbers. All right, so this is a 1 to 4 risk to reward. So plus 4%. So this is 3% and then 4%. All right, so we're going to stop here for this session. So let me just pin it so we can remember. All right, so yes, so this played out perfectly. I saw the what harmonic pattern, but then there was no, I couldn't have like a limit order immediately because this was a sharp harmonic pattern. The D actually extended, below the X. So I don't know where to put the stop loss, and I don't put my stop loss randomly anywhere. You understand? There must be a reason as to why my stop loss is going to be in that place. And since there was no candle below the D, I had to wait for what lower time frame, accumulation. And then we got that on 16 minutes, and then price, broke structure to the upside. I played the retest, and then, price went all the way to the upside, gave a 1 to 4, although didn't get to this equal highs, but then, played out 1 to 4 risk reward. That is amazing. Right. So that's good. All right. So for this session, we're going to stop here. All right. We're going to stop here, and then let's do our calculation now. All right, so I'm gonna bring out the calculator and then let's calculate. So the first trade we took for this, we analyzed for this session was a loss. So we're down 1%, and then we made 3%, and then we made another 3%. That is 6%. The second trade was also, the fourth trade was a loss also. So we lost 2%. So we removed 2%, we're up 4%, and then we lost the 29th trade, didn't play out. Obviously it would have added 3% more, but then it didn't play out. So the 30-year trade, we lost it, so we're down 1%. Okay, so we're back to 3%. All right, then the 31st was 3%. So we won the trade, 3% was 6. We lost the next two trades, so -2. All right, we're back to 4. And then the 34th trade was 3%. So plus 3%. So we are still up 7%. So we took how many trades? 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 trades that got activated, 7% increase is still okay. All right, that is 7%. I'm going to add 7% here. So 7% profit. Oh, sorry, 7%. Oh, sorry. All right, and then for the total reward, obviously this is going to be massive also. All right, so the first trade was a loss, the fourth trade was a loss. So in between we had 9% and 6%. So 9 plus 6, that is 15, minus 2, we lost, that is 13, minus 1 also, so minus 1, that is 12, 39 plus 39%, and it's 51, right? And then minus 2, that's 49, and then plus 4%. So 53% increase. Obviously, this 39, you had to wait and wait for price to get there, but eventually price did. Okay, so that is 53% that trade, all of this gave us. So 53% increase. Plus 53%. That is amazing, right? That is amazing. So we're able to end this episode with 7% profit and 53% profit also. The last session was 10% profit and 59%. Like the total reward is always very massive. And then for episode 2, it was 6% and then up 36. And then the first episode was 12%. Right. So over time, so if I've taken 34 trades, so add, 12 plus 6 plus 10 plus 7. So 12 plus 6 plus 10 plus 7, 12 plus 6 plus 10 plus 7. So 35% increase on the account, right? So still profitable. Okay. And then obviously some were more than 1 to 3, but we're just living in that. If you're just living in at 1 to 3, 35% will be up in profit. And then total reward, is way, way more than 35. All right, so that is going to be it for this session. I hope you enjoyed it. Take care. Have a good day. Bye-bye.